Hey, what's up, guys? Sam here, kicking off the free video for December 17th, 2021. So, we just finished doing the premium video for the good folks in the gold room, and this is one of the sloppier setups that I remember seeing in some time. From a structure point of view, and what I mean by structure is just if you look at the long-term moving averages, are they all stacked, fast above slow, 8, 21, 50, check, with an upward slope? Here it's correct, but it's a little dicey. Um, so you have kind of structure underneath the market still because it's been holding at the 50, basically closed at the 50 today. But so just some things that I'm seeing that kind of concern me is the momentum, right? So we always want to talk about momentum first before structure, but we understand that structure, previous highs and lows, whether the moving averages or how the shape of the moving averages, we understand that that's the most important thing, but we want to focus on momentum first because momentum changes before structure. And here on the SPY, I'm just going to focus on the SPY with today, just as kind of as a catch-all for the markets, just because it looks better than everything else. I went ahead and looked at most things here, including the Nasdaq, the Dow, the Russell, and the SPY was just the best looking one. You can see over here on the trend oscillator on the weekly, that is still correct, right? That is still correct. Green is above red is climbing, indicating that this entire trend is extremely strong. But also notice that you will have a high here, and then you have a higher high here. So price goes up, but you see how the indicator, at least for now, has been going down. That can be a little bit of a problem. It's called a momentum divergence, and it can precede somewhat of a problem. So there's that. Even though this looks ideal in terms of the structure, you have the momentum divergence, so it's not ideal. And then right here on the daily chart in the center, your momentum structure is a little off, right? You see how you're kind of making these new highs or trying to make new highs with red over green. That's not particularly great, right? When you have red over green, but they're both above the middle, really what that tells you is you should kind of just visualize all of this as kind of yellow bars or neutral bars, right? Basically, it's not as strong as it really seems to be. And then if you look here at the lower one, the high-low pro, right? Kind of sell signal, buy signal, sell signal, buy signal, sell signal, right? So that one worked, that one worked, that one worked, that one worked. Does this one work? I don't know, but so far it's been 1, 2, 3, 4, 4 out of 4 so far. This would be the fifth. So the question is, does this one trigger short? And then if you look over here at the 195, you had a sell signal pretty much at the top. You had a buy signal pretty much at the bottom. And now you have a sell signal. And that's unresolved. So you have active sell signal, yellow bars, yellow bars. It's a little sketch, just a little bit sketch. So I didn't see a whole lot in the premium video that would change my mind about this. I'm not saying necessarily it's a short. I actually just want to take a little bit of a kind of wait and see approach with this because there are also some signs that the market is going to start next week with an attempt at a short squeeze. And when you start with a short squeeze, it moves all the junk up first. So think of IWM, which we'll take a look at. Think of ARC, right? All the high beta tech, which we'll also take a look at real quick. And then if you can short squeeze all the bottom feeders, that then has kind of this positive feedback loop across the market, and that could help drive it into basically the end of the year. It's not super high probability. I'd say it's probably 50-50. So I don't know about you, but I personally don't like 50-50 odds. I don't go to Vegas. I don't play roulette for that reason. Some of you do, and nothing wrong with it. But for me, I want a little bit better odds. So let me show you what I'm looking at here on the IWM. Because there's something here. It's going to need a push. And keep in mind, IWM contains all the crap that nobody really wants anymore, like GameStop and AMC. But you have this. Actually, let's just do it from here. Let's just use the recent lows. So you have this recent low right there. And if you project it across, you see how on Fed Day, Wednesday, It created a little bit of a trap, meaning that it went below the green line with the wick, but it closed well above near the highs. That's an extremely bullish candle. You have kind of a bear trap. You close at the highs, super bullish. The next day is actually the exact opposite. So this is a bullish reversal candle. This is a bearish reversal candle. Well, what do we have today? If we still use the same low, and then we factor in this most recent low, you see how today undercuts that one too, and the volume is even bigger than the rest of them. So they're trying to carve out a bottom here, which is generally a good thing. Now, have you undone all of the bearishness of this candle? No, you have not. But here's a little trick. If you can close above today's high, that should unlock a move, at least to try to test the swing highs here, right around 225. So that'd be step one. Now, the structure here is conducive to a bottom, but that's not conducive to a bottom. That's not conducive to a bottom. That's not conducive to a bottom. There's no buy signals here. Poor trend oscillator quality. But the one thing that the bulls really have here is they have kind of a last stand. And if you look at the weekly chart, you see all these wicks down here at these lows. There's like there's a ton of them. Well, we had a false breakout, and that brought us all the way back down to the bottom of the range. That's kind of the last stand. So far, what do you have? Well, your momentum is garbage, but you have this kind of undercut dynamic that happened twice, and it's happening at a critical level. So keep an open mind that they're going to try to short squeeze. The trigger for the trade on this would be a close above today's high, a close above the high of the low bar. So above there, it probably starts to trigger the short squeeze, and that the short squeeze can likely go all the way to about 224 to 225. Now, if we look at ARC, even worse, what do we have here? Well, here on the ARC, we have kind of the same thing. Just looks a little different. So we have the same kind of low that we had on the weekly IWM. You have a giant hammer candle here, which is very, very good start for a reversal, right? Also, this hammer candle closed higher than last week, so that's a really good sign. It also closed nominally back above the previous low, which is also a very good sign. And then you have giant volume on a hammer candle. So that's a very good sign. So in terms of a reversal structure, this candle alone is yelling at you that it's trying to reverse. And then if you look at the daily chart here, you have this initial low. And you could even use this initial low from this down day. And if you stretch it across, actually let's just go ahead and use that one. If you stretch it across, you have the undercut, right? Always watch for these undercuts. You see the double undercut there? So now what do you have? Well, you have a double undercut and a higher low, which is normally pretty good. Now, if you're astute, you might say, well, hey, you don't really have any buy signals. You're correct. You don't. It's early. It's early. But in terms of kind of spotting the beginning stages of a bottom, this 1, 2, 3 thing, that's pretty proper. Especially when the weekly candle looks like that, especially when the volume looks like that. So how do you trade this? How do you make sense of this? The way you make sense of this is, at least this is the way I make sense of it. Going into next week, the charts don't look particularly great. The structure's still intact, without question. Your weekly structure is still intact. Your momentum is not great. You have the momentum divergences. So how can they get out of this box? Well, there's a lot of decent seasonality next week, which is step number one. But then what I would say to watch for, and what I'm going to be watching for, is the IWM and ARC to start moving higher. If both of these products, which were the weakest parts of the market, and still are, frankly, if they start moving higher, that then will have a positive feedback loop on other things, the Apples of the world, the Microsofts of the world, and then from there you can start to create a little bit of a rally with momentum. In the event that that does not happen, because that's what's queued, in the event that that does not happen, they start to try to do the short squeeze and it fails, then you have to watch out, because it's like all this energy goes forward, and if it doesn't hit the target, it tends to have this really kind of quick snapback, right? So if it works, it's really bullish. If it starts to fail, then it actually flips and becomes extremely bearish. So kind of a binary event. I'm going to be watching this on Monday. I plan on being basically a day trader next week, kind of putting on my day trading hat because there's so much volatility that you want to take advantage of it intraday. But at the same time, if you're trying to do swing trades, it's so volatile and the ranges are so big that you'll be up a lot on Monday, you'll be down a lot on Tuesday, you'll be back up on Wednesday, and then by Friday you're lucky if you're break even or just down a little bit, right? So the entire week passed and your swing trade did nothing because it went way up and then went down and up and down. Whereas if you were more of a day trader, you'd be able to take advantage of both the up and the down. So that's going to be my mindset going into next week. I hope some of this was helpful. It's a very murky week coming up. It typically does have a bullish slant. I think I've kind of laid out the path forward here for how bulls can create some momentum to then spark the market higher, but then also be sure to watch out for in the event that that does not happen. All right, guys. That is my time. I'll drop you one quick name that I've been keeping an eye on that I think still looks perfect, and that's TMO, which is in the healthcare space. It's TMO. Ideal chart, one of the very few that I see that's ideal from a structure and a momentum point of view. Also Chevron, CVX, I'll throw that one out there as well. You'll need good oil for that, but CVX, but TMO is probably one to keep an eye on. And we'll go ahead and leave it there. So you guys got to know what to expect. If you have any comments, go ahead and throw them down in the chat. If you traded this week well, let us know in the chat. If you traded this week poorly, and I'm going to raise my hand, I did. Because I was trying to force swing trades into a market that's more of a day trader's market. So I'll leave you with one more quick point here, just giving you all the stuff today. For quad witch weeks, which this was, triple, quadruple expiration, happens once every 3 months. The adjustment that I'm making for myself is not carrying swing trades into these weeks. And it's only 4 weeks a year, so it's not a big deal. Going into these quad witch weeks flat, and then going into them with a day trading mindset that allows me to capture all of this volatility / opportunity intraday without having to stress or be annoyed at my swing trades going way up, way down, way up, way down, way up, way down, and missing these intraday opportunities. So hopefully you found this helpful. Before you go somewhere else on the YouTube, leave us a like. There's actually an extension you can install on your browser that will let you see YouTube dislikes again. So I used to say, leave us a like or a dislike, we don't care. And then I started saying, well, they removed the dislike button, so go ahead and leave us a like. But I'll go back to saying what I used to say. Leave us a like, leave us a dislike, we don't care. But do leave us a comment, interact with us, just that the algorithm, creates that positive momentum for us. And it's free, and hopefully you get some good content and some good ideas from our videos. All right, guys, that's my time. I'll see you for the next one. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.